Ladies and gentlemen, good day and welcome to the Q4 FY'24 earnings conference call of Marksans Pharma Ltd, hosted by Elara Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Dr. Binu Patiparampil from Elara Securities Limited. Thank you, and over to you.
Thank you, Estri. Very good evening to all of you on the call. On behalf of Elara Securities, I, Dr. Binu Patiparampil, welcome you all to the management call of Marksans Pharma to discuss the Q4 and full year FY'24 earnings release and the business outlook. We have with us Mark Saldanha, Chairman and MD, and Jitendra Sharma, CFO. I now hand over the call to Mark and Jitendra. Over to you.
Thank you, Binu. Welcome everyone, and thank you for joining us in our Q4 FY'24 earnings conference call. We appreciate your continuous interest and support for the company. We are pleased to report a strong performance for the year, where we've achieved our highest revenue and EBITDA in FY'24. Our revenue expanded by 18% year-on-year to 2,177 crores, and the EBITDA expanded by 35% year-on-year to 459 crores. The performance was mainly driven by volume gains, new product launches, and an increase in the wallet share of our existing customers, as well as addition of new customers. We witnessed a favorable demand in our key markets. The pricing pressure was moderate for our RX products in the US. In UK region, we are one of the leading Indian pharmaceutical companies and aspire to sustain a growth momentum. The profitability of the company has also improved due to the softening of raw material prices and the improved operating efficiencies. Throughout FY'24, we achieved remarkable milestones. We exceeded our projected target of 2,000 crore revenue and a 20% EBITDA margin. Received key approvals from US FDA and market authorizations from UK MHRA in pain management, cough and cold, and other therapeutic segments. Our expansion and scalability of the acquired unit of Teva Pharma is proceeding according to plan, and we will see meaningful revenue contribution from the unit in FY'25. Our Q4 performance was flattish with a slight decline. Although our revenue was slightly lower as compared to the previous quarter, and this is mainly due to the seasonality of product mix, we were still above our projected target of 500 crores per quarter. The transit time and freight rates almost doubled in Q4 as compared to Q3 due to the Red Sea crisis. This escalation impacted a cost of approximately 9 crores. We are taking steps to include strategic route optimization to ensure no delay in delivery. In the fourth quarter, obviously, we've hired over 200 new people in the acquired manufacturing plant in Teva. This strategic move has led to an increase in expenses. This is crucial for growth as we scale and improve the utilization of this unit. The profitability parameters will start improving thereafter. We have strategically increased our inventory levels of finished products and key raw materials in our US warehouse due to various supply chain issues in recent times. And based on the nature of our business, we have large SKUs and are required to deliver weekly orders to our customers. This buffer helps us to mitigate the risk of supply shortages and production delays. This decision has resulted in an increase in our stock reserves by approximately 7 crores while consolidation of the account. We look ahead and feel optimistic on the coming year. Our strategic initiatives to increase our market share, enter new markets, expand capacity, strengthen our product pipeline, increase operational efficiencies, and focus on our execution should deliver a robust growth. As a part of our commitment to enhance our shareholder value, I'm pleased to announce that the board has recommended a final dividend of rupees 0.6 per equity share, which is 60% of rupees 1 face value. With this, I'd like to turn it over to Jitendra to update you on the financials.
Thank you, sir. In Q4 of FY'24, our operating revenue was rupees 560 crores, an increase of 15.2% compared with rupees 486 crores in the same quarter last year. The US and North America was at rupees 245 crores, representing a 26.6% increase on a year-on-year basis. UK and EU formulation market grew by 12.9% year-on-year to rupees 232.8 crores. Australia and New Zealand formulation market recorded revenue of rupees 63.3 crores, stable on a year-on-year basis. The rest of the world recorded sales of rupees 18.9 crores in Q4 of FY'24. Gross profit was at rupees 290 crores, up 19.8% year-on-year. Gross margin for the quarter was at 51.8%. EBITDA for the quarter was at rupees 109.6 crores, an increase of 0.1% year-on-year, and a decline of 17.6% quarter-on-quarter. EBITDA margin for the quarter was 19.6%. The sequential decline is due to surge in freight costs due to the Red Sea crisis from January 24 and increase in expenses related to the Teva acquisition, and also due to increase in hiring in the new facility in Q4 of FY'24. Profit after tax was at rupees 77.6 crores compared to rupees 82.7 crores in Q4 of FY'23, a decline of 6.1%. PAT decline was due to increase in the tax rates. The EPS for the quarter was rupees 1.73. Talking about the full year financial performance, in FY'24, our operating revenue was at rupees 2,177 crores, an increase of 17.6% compared with rupees 1,852 crores in the same period last year. The US and North America was at rupees 918 crores, representing 18.5% increase on year-on-year basis. The UK and EU formulation market grew by 22.9% year-on-year to rupees 943 crores. Australia and New Zealand formulation market recorded revenue of 218.8 crores, a 4.4% increase on year-on-year basis. The rest of the world recorded sales of rupees 97.4 crores. Gross profit was at rupees 1,139 crores, up 22.4% year-on-year. Gross margin increased by 207 basis points from 50.3% to 52.3% in FY'24. The EBITDA for the period was at rupees 459 crores, an increase of 35% year-on-year. EBITDA margin stood at 21.1%, a 274 basis point improvement over the previous year. Profit after tax was at rupees 314.9 crores compared to rupees 265.3 crores in FY'23, a growth of 18.7%. EPS for FY'24 was rupees 6.92. In FY'24, the cash from operation was at rupees 230 crores, while the free cash flow was at rupees 21.6 crores. The capex incurred during the period was rupees 208 crores, which includes 125 crore in acquired facility from Teva Farm, 30 crore in the existing Goa facility, 31 crore in the US facility, and 22 crore in the UK manufacturing facility. We spent rupees 34.6 crore in R&D, which amounts to 1.6% of the sales. We continue to remain debt-free and have a total of rupees 674 crore of cash as of 31st March of 2024. With this, I would like to open the floor to question and answers. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to only use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Agastya Dave from CAO Capital. Please go ahead.
Good evening. Am I audible?
Yes.
Yes, you are.
Thank you very much for the opportunity. So a few questions on this increase in gross margins that we have seen. So obviously there is a seasonality impact there and also a change in product mix, right? So I was just wondering on a like basis, what have you seen?
I'm sorry, you're sounding muffled.
I am using handset.
Yeah. Now you're fine. Please go ahead.
Okay. So on a like-to-like basis, what have you seen on the gross margin front?
Yeah. Hi, Agastya. This is Jitendra here. So gross margin for the year was at 52.3%, as against 50% last year. And the improvement in gross margin mainly was on account of reduction in raw material prices and also some favorable product mix. So we expect the gross margins to remain in the range of, between say 50 to 52% on a sustainable basis.
Okay. So this, whatever benefits we are, like, this is sustainable, right? This range between 50 and 52.
Yes, definitely.
Okay. So what was the capacity utilization at the new plant due for? The Teva.
The capacity, we are in the process of increasing the capacity of the new facility. And in terms of the capacity utilization right now, it is very low. And but from this month, April onwards, we have started utilizing the newer capacities as well. So in coming quarters, we will see much improved capacity utilization at Teva facility.
Okay. In terms of the additional costs that we have incurred, so now if I look at the employee cost base, for example, it's at around 80 crores a quarter. So is that a good assumption that like we are done with the hiring, or are there any incremental hires that you need to make even now?
There will be some more incremental hiring, but I think the large part of it is already over.
Perfect. And any other startup costs that you will incur?
No, I think we have incurred almost all major costs.
Right. So, sir, on a plant level, when do we expect the break-even to happen? By when? Tentatively, sir, very, very tentative numbers. Timelines, not even numbers.
I think from this quarter itself, we should be breaking even.
At an EBITDA level, sir, or PBT level?
At EBITDA level.
Okay, great. So finally, for next year, now that you have the plant in place and the production is ramping up, what kind of volume growth are you anticipating?
So for this, obviously we have broken the capex and capacity to three phases. The first phase was 3 billion tablets, and which we have achieved. We've achieved installing this capacity. So now we are scaling up to utilize this capacity, and we'll probably have that additional revenue which comes out of 3 billion. But in the FY'25, we plan to increase this capacity towards the second half of FY'25 to 5 billion. And hopefully by the end of FY'25, we will start, this will be added value accretions to our already existing revenue.
So could you quantify that number? Can we see like a 15% growth on the entire base? So the space of 2.77.
Yeah, sure.
Yeah?
Yeah.
15%. I'm saying just volume growth, sir. I'm not talking about value.
Oh, yeah. Definitely. 15 is definitely achievable.
Okay, great, sir. Thank you very much for taking my question, sir. Thank you. All the best. I think it was a pretty decent quarter, though.
Thank you very much.
Yeah. Thank you very much, sir. Thank you.
Thank you.
Thank you. We have our next question from the line of Nirali Shah from Ashika Stock Broking. Please go ahead.
Hi. Could you provide insight into what percentage of our top line comes from ibuprofen, and considering it is our largest molecule, and what our current market share is for this product? Additionally, what are our internal market share pulls for ibuprofen?
So ibuprofen is, Ibuprofen is just one of the molecules that we have. Obviously, it does contribute decently to our revenue. I would say we are approximately about 15% of our contribution comes from this molecule. 15.
Okay, and market share?
Again, depends on which market we are talking about, but it will pretty much be 20%, 15-20%, about 15% maybe of the market share.
You mean globally or just North America?
It's a very broad question. So I would say globally. I mean, whichever markets we are in, on an average.
And my next question is, given that our focus on the UK and Europe regions, they have actually shown the highest growth over the past year, we see YOY comparison. Could you provide an update on the expected launch timelines for new products in these markets?
Our launch time for new molecules in the markets are happening every quarter. So we do expect launches happening during the year, which will again fuel growth. We are very optimistic and bullish on our roadmap for the UK market. And for the Europe market, obviously, we do plan, we are working towards having an entry into the European market, hopefully in this calendar year. So we are working towards, not calendar, financial year, we are working towards that.
That's great. And just one more, just a global perspective. So with the increasing demand for drugs in the UK, I just came across an article today. So how well are we positioned to capitalize on this opportunity, considering UK is a mature market for us?
We are very strongly positioned. We are amongst the top five companies out there in UK. So we are very strongly positioned in terms of inventory, in terms of our stock position, in terms of our inroads and market penetration. So we are strongly positioned out there in UK.
Got it. All the rest. Thank you.
Thank you.
Thank you. We'll take our next question from the line of Sudhir Beda from Beda Family Office. Please go ahead.
Yeah, good afternoon, sir.
Good afternoon.
And congratulations on a good set of numbers for the FY'24. In fact, the last quarter was muted, and that, I think, was very well explained by you why the margin was down a bit. Sir, my questions are like, what's your outlook on US market? I believe that US is a very, very big market, and you are trying to penetrate. And if you are able to succeed, then huge market will open for you. So can you throw some light on your US efforts in US market?
We are very bullish on the US market. It is a growth driver for the next 2 years. We have increased our capacity. We've increased our presence out there, our product portfolio out there. So we are expecting to double our revenue, as a matter of fact, in the US market soon. So literally we are quite optimistic and bullish where US market is concerned.
So what kind of growth do you expect in US market in next couple of years?
Well, in a short-term point of view, from a from a span of maybe 1 to 2 years, we are looking at doubling our revenue. So if we are doing 100 million, we're looking at 200 million.
Great. That's so nice to hear. And sir, I think somewhere the conference you have projected some 3,000 crores of revenue by 26 and 20% plus margin. Is it still achievable, or how do you see your next couple of years panning out?
It is still achievable. Last year we had projected 2,000 crores and we landed up at 2,177 crores. So we did cross our annual projection. I believe in the next 2 years we'll definitely touch 3,000 crores.
Great. And sir, the last question, there are some reports on the shortage of drugs in US. So what's your opinion on that, and how is that opportunity?
Well, there is some report of shortage of drugs, but I don't think we stand to gain on any of that. And these are spot shortages which happen and then they go off after some time. So, but again, I don't think it is basically within our portfolio to optimize to basically encash on that.
Oh, sure. Thank you, sir, and all the best.
Thank you very much.
Thank you. We'll take our next question from the line of Kashish Thakur from Elara Capital. Please go ahead.
Hi. Thank you for the opportunity. Sir, my first question is based on the Australian market. If I'm just looking into your numbers for past 2-3 years, so your Q4 has been substantially stronger as compared to other quarters in the Australian market. So any specific reason behind it? And should we...
Because Australia has a reverse seasonal seasonality is different in Australia. So when it's a summer out there, it's a winter out there, right? So normally the winter always is the peak season for any pharma industry which has which are strong in pain and cough and cold. So they have a reverse season grid out there compared to other markets in the world.
Understood, sir. Thank you, sir. So my second question will be your R&D outlook. What kind of R&D spend should we expect for FY'25?
Around 2%.
Sorry, 2 to 3%.
No, 2%. I would say 2% is more reasonable.
And any like specialization you want to target this R&D towards?
We are working on diversified portfolio. So it basically covers a huge portfolio and segments and delivery systems. So it's difficult to pinpoint on any specialty, but it has different delivery systems involved in that.
Understood, sir. So my next question will be on the US market. What is the total number of monographs you have overall in US market?
About 30 odd, 25, 30 odd.
And how are we seeing this in FY'25?
The nominal growth that you would expect, maybe 40 plus.
So around 10 plus kind of in FY'25.
Yeah.
So last question will be on the capex. What kind of capex can we expect in FY'25? And any kind of capex which is going to be spilled over in FY'25 from the Teva plant?
So in Teva we have invested about 125 crores. We had presented about 200 crores as what we had kept for Teva. What we needed to get Teva to at least minimum the 2 phase that we had planned out for it. So we would be putting in another 75 odd crores into Teva. And then the nominal capex which goes on into all our plants that whether it's US or earlier plants, we normally do nominal capex which goes to about 25 crores on per plant.
So optimally 100 crore is what we are expecting.
Yeah, about 125 crores total.
Also, last question, if I may. Again on Teva plant only, by when can we expect the optimum utilization for the Teva plant?
So like I said, we broke, obviously there's only so much you can do in a short span of time, and we have commercialized the plant. We have got it up to 3 billion units. And we had just started operation to capitalize on this 3 billion units. Now we are investing into the next phase, which will take us to 5+ billion units. That 5+ billion units will probably come after September, in the second half of the year, financial year. But hopefully by the end of this year, we will have a decent run rate revenue coming out from the Teva plant.
Understood, sir. Thank you, sir. Sir, I have further few questions. I will get back in the queue. Thank you.
Thank you.
Thank you. The next question is from the line of Deepak Jain from SKS Research. Please go ahead.
Hello, am I audible?
Yes.
Yes, you are.
So thank you so much for the opportunity. So my first question is to understand what is the next target or goal Now that we have crossed our targets of rupees 2,000 crores in revenue and EBITDA of 20%.
Our next milestone will be 3,000 crores. Okay.
So my another question that I had was regarding the employee expenses. Is this a new base that would be with the onboarding of Teva's acquired manufacturing facility employees, or will it increase in the coming quarters?
There might be a slight increase, not marginal, but not exhaustively, because most of the people have boarded on. It just depends on what phase of the acquisition, what phase of the CapEx we are on. So as and when we go up, let's say 5+ billion, then we would need more people. If we are talking of between raising it from 5 to 8 billion, then we would obviously need more people to fuel that growth.
Got it. Question from my side. Just wanted to understand, so any progress on the targets you were exploring in the European region?
Well, we are in dialogue. We are in advanced dialogue, but nothing concrete right now. But we are hoping, we are optimistic. We are hoping. M&A is such an unpredictable thing. Even when you come to the last step, it may not happen. So it's right now there's nothing concrete to discuss or put pen to paper right now.
Thanks. For the question, I'll join back in the queue.
Okay, thank you.
Thank you. We have a next question from the line of Dr. Binu Patiparampil from Elara Securities. Please go ahead.
Hi, Mark. You mentioned about doubling the US revenues from current level 100 million to 200 million in a couple of years. So, how would this work out? Would it be about penetrating into the existing customers, or would it be new customers?
Yeah, obviously it's a mix, Doctor. It's a mix of both. Our order book status is quite healthy. So we have a good order book status to give us visibility of reaching to this number. And but it is a growth on existing clients as well as new customers coming in, and it's a mix of both actually that is fueling us to achieve this objective. It's still a very small number for a market like US, so it's not something that is novel or is unique in any way, but it's still the tip of the iceberg.
Understood. And when you say penetrating the existing customer further, is it by new products to the customer, or is it that in the same product you will get more market share from a single customer?
So when it's a new customer, it's normally with existing products that we are supplying to another customer, because that becomes our strength and our visibility for the new customers to see the performance and consistency. So it's normally the existing molecules, but there are cases where they have gone and opted for new molecules altogether.
Understood. Okay. And when this is a big jump in number from 100 million to 200 million in 2 years. So what would be the key risk to this, achieving this in your mind?
What will be? I'm sorry, you were not. What will be
the key risk to this, achieving this in your mind?
I don't think there's much of risk because obviously when we talk of these numbers, it is with a good understanding on the visibility of contracts, the order book status, and where we will stand by within the next 12 months, and what will fuel the balance 12 months. So I can safely say that we are quite confident of achieving these objectives.
Great. Thank you very much.
Thank you.
Thank you. We'll take our next question from the line of Darshil Zaveri from Crown Capital. Please go ahead.
Hello. Good evening, sir. Thank you so much for taking my question. Firstly, congratulations on a great set of results. Hope I'm audible.
Yes, you are audible.
Yeah. Hi, sir. So, sir, just wanted to, ask that I think our target is to grow to 3,000 crores by FY'26, but our also other target is to double the U.S. market from 100 million to 200 million. So majority of our growth on the full basis is going to come from U.S. because that only will account for around 700-800 crores plus revenue coming directly to us from U.S. and North America. So can we, overperform on our, 3,000 crores because UK is also growing at a good space. So just wanted some color on that.
Yeah. So this rapid growth, obviously, when you talk of it, you're right, UK is also growing, but based on this high jump within a short span of time, the US will be a growth drivers to achieve this objective. This will constitute, like you said, only 800 crores. The balance 200 crores will come from UK and other markets. But definitely there's a possibility that UK may contribute more. But here again, we are talking of literally the next 24 months. So UK may need a little more time as the base is already very big in UK compared to the market size. For US, the base is very small compared to the market size, so it's easier to go out there.
Oh, fair enough, sir. Fair enough. That makes sense, sir. And so just another part, like once we scale up to this level, will our margins also improve because we'll get some leverage, right? So because currently also you are impacted
so our margins will improve because of operational efficiencies will increase. Operational leverage will also increase. So definitely we are anticipating a much more robust bottom line.
So that is 23% roughly, right, sir? Because in like December quarter, we were able to get that bit of higher revenue. So just wanted to,
it's difficult to actually put a number and say, but on a consistent basis, are you talking of EBITDA?
Sorry?
Are you talking of EBITDA?
Yeah, EBITDA.
I didn't get you. When you're saying margins...
EBITDA margins, sir.
So I think, EBITDA margins will improve. I think it is possible to achieve those numbers. So we are aiming for better numbers, obviously. So, I think it is doable.
Oh, perfect. So, and just a final question, sir. With, some geopolitical risk as well as, some, wars going on. So how will that impact our US business as well as elections coming up out there also? Is there like any sort of a risk for us out there or just any, anything that you could see in the environment that can happen us?
If I had that answer, I would have been a global leader right now. I honestly can't predict the geopolitical issues and force measures which may be beyond our control. I don't have a crystal ball, unfortunately, and we literally have no say in on the wars that are happening. And hopefully we all look for better times, and we would like not to think of the worst case scenario because we all want peace and growth.
Fair enough. So that's it from my side. So all the best. So thank you.
Thank you. Next question is from the line of Akshat Vijay from Hem Securities. Please go ahead.
Hello, am I audible?
Yes.
Yes, you are.
Yes, sir. So I was going through your financial numbers and I see that at the standalone level, the business has delivered a very strong growth, in this quarter. But at the consolidated level, at the subsidiaries, there the performance has been on the muted side. So can you throw some light on it, like why the subsidiaries have underperformed in this quarter? Or maybe this is not the right way to look at your question.
Akshat, can you mute once you're done with your question? There's some background noise on your line.
Okay.
Thank you. Sir, please go ahead.
Yeah, so standalone, obviously there is a consolidation that happens at a corporate level, at a group level. So while standalone looks positive, subsidiaries and everything at the end, consolidation that takes place basically results into the end numbers. And subsidiaries, that are in UK and US, these are all related to again seasonal product mix that I mentioned about. I would say they are flattishly okay, but that said and done, again, we have to look at the overall metrics of what we had projected and where we are, what we've achieved. Not so much quarter to quarter because the third quarter is the peak season in where we talk of cough and cold and everything of that stuff. The winters are always the better months compared to the summer.
Okay, fair enough. And my second question is regarding these USFDA observations which we have received for our Goa facility. So, could you please share the status of the same, how severe they are, and do you see any impact on our operations in the short term? And by when are you expecting any?
I don't see any impact on our operations, number one. Number two is obviously we replied to all the observations, and we don't foresee any issues in the observations. Now we have to wait for FDA to come back, but as far as we are concerned, they are just normal observations that were there.
Okay, sir. That's great. And one final question which I have is that in your previous calls you mentioned that you are expecting some additional 600 crores of revenue from the Teva facility in FY'25 onward. So, will you reassure that we are expecting the 600 crores?
Well, we should be hitting, let's put a run rate number. I will not say we will hit 600 crores for the full year because these are ongoing capex. We never landed up spending 200 crores in Teva. We did only 125, like I mentioned in our call. We did only 125 crores, which is literally slightly more than half of what we had presented that we will be doing. We have achieved the first phase target of 3 billion tablets. And now we have to hit the 5 billion tablet plus mark. So once we start hitting that, we will definitely start hitting the run rate that would see us to this number that you talk of.
Okay, sir. Great. That's it from my side. Thank you.
Thank you.
Thank you. Next question is from the line of Viraj Mahadevia from MoneyGrow India. Please go ahead.
Hi, Mark. Jitendra, congratulations on stable results. Mark, a question for you regarding the new Teva facility. What is the envisaged product portfolio? Is it likely to be a higher margin product portfolio with better mix versus the rest of the Goa, or is it likely the same?
It will be most likely the same, maybe slightly better. But I would put a average. I mean, at the end of the day, even our Goa is doing decent margins, and we are doing decent EBITDAs and gross contribution, gross margin. So I would like to maintain it at the same portfolio. It may be slightly better, depending on the product mix. But the product mix will be slightly different. So I'm hoping for better margin to come out of the plant.
Right. And Jitendra touched upon this, but you likely break even at the EBITDA level in Goa in the next 6 months?
Yes, definitely. We are expecting in this quarter itself.
Right. Okay. And look forward to you using those cash balances for that acquisition. Thank you.
Thank you.
Thank you. We'll take our next question from the line of Aditya from MSA Capital Partners. Please go ahead.
Hello. Am I audible?
Yes.
Yes.
Thank you so much for the opportunity. Congratulations on a good set of results. So, wanted to understand a few things. First is on Teva. So that now that Teva is in India and will be manufacturing in India and exporting majorly to UK and Europe, do we envisage a better gross margin profile? Not a lot, but a slight uptick from here because of Indian to export market.
It's pretty much what the other gentleman Vijay had spoken in the previous question. Yeah, I mean we have a product mix that we are planning that we are launching from this facility. So we do see a better product portfolio and product mix coming out of the facility. But that said and done, our margins are quite decent. First things, I mean the most important thing in the Teva facility that we've acquired is to first break even. and basically then you have operating leverage kicking in to see the profitability kick in. So I think we have to cross that bridge when we arrive at it.
So what I was trying to understand was, definitely you had answered the previous part of the question that the product profile will be similar. But just wanted to get a feel that because this facility is located in India, do we have any margin advantage when we'll supply to UK and Europe?
No, I mean, all our facility, this is not the first facility we have in India. So in comparison, we have another facility which does literally 100% of our facility, what we manufacture goes to Europe and US. And I think from that standpoint point of view, our product portfolio in terms of gross margins will be very similar, maybe slightly better, like I said. So, I mean, from a comparison, we are supplying into these markets. So what you see is what you see are historic numbers will basically increase, but the margins will remain relatively same.
Perfect. So, in a previous few con calls, you had mentioned that US is operating at a bit lower EBITDA margin than our overall company margin. What would be the margin, and where do you think that once we double the margins would be better?
Now, see, last year we had relatively better EBITDA margin in US as well, and as we increase our revenues in US, we are seeing a lot of improvement in our EBITDA margin because of the operating leverage which will get kicked in. So I think we will see a much improved margin in US from this year onwards.
So, on that question only, just as an addition, because UK also we have similar revenue, but the margin profile is higher. So what is that? What is there an idiosyncrasy in US because having the same revenue but a lower margin profile than our UK and Europe operations?
The UK and US are two different markets, so I think we can't compare the two, and the product portfolio is also different. But on an average, I think if you can see the trending of the US, what it is showing the same amount of gross contribution or margins, but the operating leverage had to be kicked in, and now that the operating leverage has kicked in and it will only improve from there on. But from a margin portfolio point of view, it's very similar. It is only the operating cost in US is different, and that in UK is different.
Understood. And do we plan to trigger US FD audit on Teva?
Maybe in the near future, yes.
All right. Any thought process maybe in the next couple of years, or it is a longer thought process that you have?
Probably a shorter thought process. I don't think couple of years. I hope we can get it next year.
Perfect. Understood. Thank you so much, and wishing you all the very best.
Thank you.
Thank you. Our next question is from the line of Kashish Thakur from Elara Capital. Please go ahead.
Hi, thank you. Thank you for giving me opportunity again. Sir, so just one question. I was just going through your annual reports of past few years. So, in FY'22, you had given time cap ka financials. You have given it the EBITDA number and PAT number. So, similarly, will you be able to give us the EBITDA and PAT number of FY'23 and FY'24?
Yes, definitely. We will be, the subsidiary annual reports will be available on our website. So definitely those numbers will be shared.
Understood. And sir, just following up on the question which previous participant asked, sir, what kind of EBITDA margin we might be generating from our OTC segment in US?
See, we are at, 10% plus EBITDA margin in U.S. as well, in terms of our overall U.S. portfolio. And that is going to increase. That is what we are expecting in this year as we increase our revenues.
Understood. And sir, any bifurcation, can you provide us like what the percentage of sales in US will be from prescription business and what will be from OTC business?
See, broadly, the mix in our US revenue for OTC is 80% and RX is around 20%.
Okay, thank you so much.
Thank you. Next question is from the line of Shamal Patel, an individual investor. Please go ahead.
Am I audible?
Yes, you are.
Hi, Mark. Good evening.
Hi, good evening.
In questions, I know you must be, I don't know what to say, but I cannot keep everything to my heart. That's why I keep on asking, of course, for the betterment of the company. In a 314.9 crore profit, just 27.18 crores is given as dividend. Don't you think you can improve the percentage of dividend linked to the shareholders who have been with y'all thick and thin? Just 9%. Good companies give 85%. Okay, I don't expect 85%. But can't they have a benchmark of giving 25% back?
So, Shamal, we had a formula of free cash flow that we had mentioned, and we are going. Actually, we have gone above that formula itself. Free cash flow based on a free cash flow basis, it could have been much more lesser, but we've actually improved over the last year. So a lot of from a free, we always do it based on free cash flow. We invested, like we mentioned, a substantial amount in capex, and based on the free cash flow that was generated, we basically then distributed the full balance amount after that into dividends.
But we can't have a policy of 25% of the profits of the company because we already have 674 crores in cash. I'm just asking,
No,
the profit figure basically, eventually the funds get utilized in various areas. So working capital adjustment is important aspect we need to see. The tax payments also are huge, and the capex is also there over and above that. So basically, as a company, we have decided we have a policy of distributing 1/3 of free cash flow to the shareholders, and we will definitely stick to that. Definitely, we are investing more monies in capex and other growth-related avenues. So that also has a priority. So basically, approach will be eventually to mix and follow the policy which we have, established at board level.
Yeah, Mark and Jitendra ji, boss, but then, till the people turn into buyers, Marksans' share price cannot improve so much. And the people who always see what is the return the company offers. I'm not trying to be selfish. I put it on record without knowing I could be one of the largest shareholders of Marksans. I don't know individually. I'm not talking like Mahavir Prasad Agarwal or something. But as individual shareholders, I must be one of the largest shareholders of Marksans. And I try to see the benefit which the company would get. Because if the company gets, I will get, na? And what we are asking is not much. See, 25% if you stick on, even 20%, okay, we will get 20% of our declared profits. That should even offset the fee of shareholders. 2015, Mark and Jitendra, 59 years, boss, 9 years. I don't want to speak because it's already on record. Not that I have made any money.
We've lost the connection for Mr. Patel. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. Next question is from the line of Deepak Jain from SKS Research. Please go ahead.
Thank you for the opportunity again, sir. So one more question that I had was regarding the backward integration, which is a great move. So just wanted to understand when will the benefits start kicking in for this move?
So we've filed, like I said, one DMF already on one of the items. We have to basically get an approval to basically use that DMF of that active into our formulation. So we are now taking batches, and we're going to put it on stability, file it for pass. We have to file a prior approval to FDA. So we are looking at a good 6 to 8 months, a minimum 8 months and above timelines needed for that.
Okay, understood. So one more question is regarding, I think, raw material prices have been on the lower end, at least the last few quarters. That's been the trend. So do you expect the same trend to continue going forward, or is there any correction, like changes that you would be expecting?
I think the raw material has hit its bottom low, so I do believe that it will be stable. Another gentleman spoke about war or something of that stuff. We can't predict any of the post-merger part of it. But right now, based on our outlook, I do believe it will be stable.
Okay. So one last question from my side. Do we have any substantial launches coming up in FY'25? And can you just let us know any revenue contribution for these?
So, yeah, we do have launches coming in FY'25, definitely. But revenue contribution is difficult to pinpoint to a launch or product launch, because we have multiple products that we'll be launching and into various markets. So it's difficult to actually say that, which product will give you what revenue on a call, basically.
Thank you, sir. Have a great evening.
Thank you very much.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. The next question is from the line of Jayesh, an investor. Please go ahead.
Hi, good evening. Am I audible?
Yes.
Yes.
Yes. So my question is, when 2 years down the line, when we will be achieving our desired revenue of 3,000 crore plus, so will we be able to maintain the sustainable net margin rate of 15% and more, or will the Teva Pharma dent a little bit on the net profit margin?
I think if we hit we're talking of 2 years down the line, I think it should be, we should be able to maintain the margins. It may improve only. It is not going to go down.
Yeah. Thanks a lot.
Thank you. Participants who wish to ask a question are requested to press star and 1 on their phone. As there are no further questions, I now hand the conference over to management team for closing comments. Over to you.
Thank you all for participating. I know it's always tiring in the evening to get on a call, but once again, I'd like to thank you for your continuous interest and support in our company. And be safe, and looking forward to talking to you soon. Thank you. Thank you.
Thank you, members of the management team. On behalf of Elara Securities Limited, that concludes the conference call. Thank you for joining us, and you may now disconnect your lines.